Today, Circle Internet Group, ticker CRCL, made a big move, but not the kind investors like to see. The stock dropped 20.11% in a single day, closing at $101.17 on March 24th, 2026. That is sharp pullback, especially for a company that's been one of the most talked about names in the crypto and fintech space. So what exactly happened today? And more importantly, what should investors do next? Let's break it all down. First, let's talk about why CRCL dropped so much today and how the stock has been performing overall. Today's decline wasn't just about the company itself. It was also about the broader market. We're seeing a clear risk-off sentiment right now, driven by rising geopolitical tensions, especially in the Middle East, along with surging oil prices above $110 per barrel. At the same time, U.S. Treasury yields are climbing, which is pushing back expectations for Federal Reserve rate cuts. That combination tends to hit high growth and speculative stocks the hardest, and CRCL definitely falls into that category. But there's also a company-specific angle here. Circle's business is heavily tied to interest income. The company earns revenue from the reserves backing its USDC stablecoin, which are largely held in cash and short-term treasuries. So when investors start to believe that interest rates could come down in the future, that directly threatens Circle's earnings potential. On top of that, there are growing concerns about rising operating costs, which are projected to reach as high as $510 million. That creates pressure on margins and raises questions about long-term profitability. Now, zooming out a bit, CRCL has had a very volatile run. The company went public in June 2025 and quickly surged to highs near $299. Since then, the stock has been on a roller coaster. Even after this drop, it's still up about 58.9% year-to-date in 2026. But at the same time, it's still down roughly 60% from its peak last summer, and it fell over 59% in the 6 months leading into early 2026. So this is clearly a high volatility stock. Next, what exactly does Circle Internet Group do? At its core, Circle is best known as the issuer of USDC, one of the largest stablecoins in the world. USDC is pegged to the US dollar and is widely used in crypto trading, payments, and decentralized finance. But Circle is more than just a stablecoin issuer. The company is positioning itself as a key infrastructure provider for the on-chain economy. It offers blockchain-based payment solutions and developer platforms, including its Arc platform, which enables businesses to build financial applications on top of blockchain rails. In terms of revenue, the majority still comes from interest earned on USDC reserves. But Circle is also expanding into payments and enterprise services to diversify its income streams. Now let's talk about analyst expectations. Right now, the average 12-month price target from about 23 analysts sits around $126.29. On the bullish side, some analysts have price targets as high as $243 to $280, suggesting massive upside as Circle can maintain its leadership in the stablecoin market. On the bearish side, targets range as low as $50 to $60, reflecting concerns about competition, regulation, and declining interest rates. Looking further out, some long-term valuation models suggest the stock could reach around $254 over the next 4 to 5 years. But that depends heavily on execution and market conditions. So clearly, analysts are very divided on this stock. Now, let's look at valuation. By traditional metrics, CRCL looks expensive. It currently carries a value grade of F from AI, which labels it as ultra expensive. One major issue is that the company is not consistently profitable yet, with a negative trailing EPS of about negative 29 cents. That means the P/E ratio isn't even meaningful at this point. Some discounted cash flow models suggest the stock could be overvalued by more than 200% based on current fundamentals. Others are more optimistic, placing fair value closer to around $144 if growth assumptions hold. So valuation really depends on whether you believe in the long-term growth story. That brings us to the big question. Is CRCL still a buy? The overall consensus right now is hold. The bull case is centered around long-term adoption of stablecoins, with regulatory frameworks like the Genius Act starting to take shape. Some investors see this as a major turning point that could legitimize and accelerate stablecoin usage globally. Bulls also argue that this recent dip could be a buying opportunity, especially if Circle continues to expand partnerships with major players like MasterCard, Visa, and Shopify. But the bear case is just as strong. Skeptics point out that the market may be overestimating growth while underestimating risks, especially the impact of falling interest rates on revenue. There's also the risk that new regulations could actually increase competition by allowing traditional banks and fintech companies to launch their own stablecoins. So this is definitely not a clear-cut buy. Now let's quickly go over the key risks. Number one is regulatory uncertainty. While new laws could help adoption, they could also open the door for more competitors. Number two is interest rate sensitivity. A large portion of Circle's revenue depends on Treasury yields, so if rates fall, earnings could take a hit. Number three is margin compression. Rising costs and revenue-sharing agreements are putting pressure on profitability. And number four is competition, from both crypto-native projects and traditional financial institutions entering the space. Finally, a couple of additional things investors should keep in mind. There was a lockup expiration earlier this year, in February 2026, which allowed insiders to sell shares. That can continue to create selling pressure and volatility. Also, even though Circle is a stablecoin company, its stock still tends to move with the broader crypto market, including Bitcoin sentiment. So you're not completely insulated from crypto volatility here. At the end of the day, CRCL is a high-risk, high-reward stock. If you believe in the long-term future of stablecoins and blockchain-based finance, this could be an interesting opportunity. But if you're concerned about interest rates, regulation, or competition, it might be worth taking a more cautious approach. As always, make sure to do your own research and invest based on your risk tolerance. Thanks for watching. And if you found this helpful, please like the video and subscribe to the channel for more stock analysis and investing insights.